What up guys, so this is the second video to the trading journey. This is literally a day after the previous video, which was day one of my journey using ICC. And someone told me in the previous video to change my mic settings because the quality of the audio wasn't clear. I'm gonna be honest with you, it's probably because I didn't speak up. But I'm gonna record this one to document the same exact chart that we're seeing, but I'm also going to talk a little bit more when it comes to certain points that are crucial when it comes to applying yourself to ICC. So the creator of, or the founder of ICC, right? It's the same thing. Like, it's every strategy comes down to pretty much some of the same exact things. It's just a different lens on how you can see it. And ICC's allowed me to see the charts in a whole simpler and much easier approach. I used to use different indicators whenever I would check the charts. So like I would use the SMA, EMA, I would use the RSI, I would use the MACD, right? I would use all these indications just to be net negative, right? And just to not understand what I did at all. Like, I was clueless, right? I switched around with ICT, I switched around with SMC, I switched around with, I did options trading, like in the very beginning of my journey. I'm currently 8 years in. At the same time, I'm actually putting in work for the first time in like I came back to this journey. So like in the middle of the 8-year process, I quit like 2 or 3 times in the middle of that. And I would say 80% of it to 90% of it wasn't fully 100%. Like, if anything, it was extreme complacency or laziness, right? It was content. And starting at the beginning of this year, which I would say that my trading journey officially started because I actually put genuine work. I actually put genuine time. I actually write in my journals. I record my trades. I analyze the charts whenever I can. I actually apply mental discipline when it comes to trading, right? And I actually put my full raw experience into adopting this new strategy, right? It's not necessarily new. It's just a way of seeing the charts. Like I just said, okay, it might look confusing even though it's simple. Here's this new language that basically says the same exact thing. It's just an easier way of speaking it so you know what you're getting yourself into, right? You're playing the same game as everyone. The approach is going to look different, but it's going to make things easier. And that's what ICC does. So the creator of ICC, his name is, on the internet, he goes by Sai, right? And Sai's doing an event today. I'm going to be meeting up at this event at 6 o'clock. It's going to be like a Q&A meetup. It's us versus them tour around the world, around America. And Houston was one of them. So I am going to be participating in that. So if you're seeing this, bro, I was there. I wanted, like, shout out to you, bro. Anyways, I want to cut straight to the point. So the whole point of ICC, the whole point of trading in general, right? ICC is the lens. Trading is the route to your destination. Just like anything else. If you are a trader, your goal is to make money and to get out and to live your life, right? And then the benefits of trading and to master it, right, is to live a life where no one can control you. You have full freedom. You can get off the charts at any time because you understand it. You know how to get in and out. You are essentially the master of your fate in every way possible. Like, you don't have to clock in, clock out. You don't have to listen to someone. You don't have to, you also don't have to attend the charts 24/7. You can also sit out, right? When it comes to trading, you can also skip opportunities, but you can also miss opportunities, right? It's all up to you at the end of the day. It's under your control. So it's the full on effect of accountability. It's a full on responsibility towards you. You are the person in charge of everything that happens on the desk, right? I want to get straight into what I'm looking at. I know I talked about this in the previous video, so let me talk over it again. And this is without looking at the first video. I just want to show you guys that it's the same thing. Like, what I'm seeing right here is a trend that's been confirmed on the higher time frame, and then we push down and we are testing these levels, right? If you look at the lower time frames, like, let's simulate the fact that we got in this trade. Let's just simulate I didn't get in this at all, but let's just say something happened here where you got in, right? And you're just looking to take profit. Like, you should already know this before you enter, by the way. You should already know where your exit is. For me, I didn't get in this trade before, but let's just say hypothetically, right? We did something like this. Cool. I'm looking for somewhere closest to these points, because this zone is a buy zone. These are where people are staying, just like the people up here before this happened, right? These people held up this zone every time price came back to these levels, right? So let me go ahead and take those off. So when price came back down to the zone, buyer zone, what happened? Price reacted, huge jump. That's on top of the crypto news that came out with the Clarity Act, right? Right after the Clarity Act, right? That was extremely bullish, but at the same time, even with the news, right? Even though we swept these highs, the market overall on the higher time frame, on the daily, did not get above a crucial key level, which was up here. If we got past this level, the next level would have been what I believe to be was right here, because there's always a reason. There always has to be a reason behind the strategy that you implement, right? I'm using numbers, so you have 84k and then you have 85k. This range is a crucial range because past events here, whenever price would react, is around this range, the 84 to 85 range. And price also made a clear sell-off here, so we were in bearish territory ever since Bitcoin started selling off in this range. What the hell just happened? See, we were in critical range. We were consolidating for a long time, right above 84, 85, up until February 2026, and then we sold off, right? Forget all that. Let's go back to what actually matters, because if you watch size videos, you'll understand that a lot of the events that take place for you to trade are usually within the first couple days, if not at max 5 days, 6 days out at max, right? If I'm using the 4 hour, I like to see structure. If I'm using the 1 hour, I like to see structure. Anytime I'm using any sort of time frame correlation, I want to see a story being told. So ICC itself is a story. The indication is the beginning of the story. The correction is the middle of the story. The continuation is the conclusion of the story, the nearing of the end, right? You already have your plot, you have the climax, and then you have all the clues to justify and create a conclusion, which is the way you take profit, right? And sometimes it comes down to three things. Either it does exactly what you want, so it hasn't happened yet, but it goes down exactly to this level, right? That's one thing. It does exactly what it's supposed to do, which is go to the next level, right? Take profits for me when using ICC are just storytelling to the next level, to the next chapter, right? That's literally what it is for me. If not the next level, the next key number. So 80k, 75k, the next psychological number. The two other factors that come into play whenever you are trading and then you're just waiting on price to do its thing after you enter is you have your key levels or psychological levels, right? Like in the middle of the videos that he teaches, he talks a lot about the continuation phase. He talks all about everything, right? But in the continuation phase, as long as price is consistent with the trend, is what I'm telling you is what I learned off of those videos, right? As long as price continues to respect the trend, as long as it continues, it could even have an indication, but if it respects the trend, right? Indication, Clarity Act, some bullshit, right? It will just come back to respect the trend. As long as it respects the trend, it will continue to push through and follow through the trend, right? So if it's a downtrend and it respects the lower high, it's going to, if it respects the lower high, then the next point it makes, the next new low it makes with the next lower low, the next time it comes up, the trend is true, meaning it'll remain bearish as long as it respects the previous lower high. And it will continue to do this until it is tested, right? And when it is tested, it is crucial, especially whenever you're in a trade, to determine whether or not you need to take action on that trade. This is still a bearish territory, right? This area right here. The moment you have to consider selling, this is a mistake I made not too long ago based off of this pattern that I just reflected on 2 days back. and I made the first video and now I'm making the second, right? The moment it contradicts and ICC remains true to the opposite side, right? Or you've reached a territory where, you know, price is no longer respecting a downtrend. Maybe it's consolidating and it's hitting this point where it's sort of just hitting lows and highs within the same range because it's not pushing past the previous low. The swing low that rallied all the way here and made all these points, it's like a record low for this session, right? This whole session, imagine this is a session, it's the record low and price is not pushing anywhere past it. It also made an indication to the upside, making a higher high, right? That's contradicting the initial key elements that you need to consider this a bearish trend. This becomes consolidation point, a new structure that no longer respects the downtrend. It's now just consolidating until we get to a point where it does. That's just a whole new indication. This can mean anything. Like after 5 months of doing this, like truth be told, right? You have key levels, psychological levels. Now you're running into the nature of the market, which is macroeconomic factors, things that you have no control over that don't necessarily affect the markets at all. I mean, in terms of like, they don't affect the key levels. Like the key levels will remain key levels, right? Price will always push towards those levels until the Clarity Act, until, you know, Twitter news, until like something that involves institutional involvement or large retail involvement, volatility comes into play. And that's usually something you'll find out on your own, right? Because at the end of the day, we're all retail and we all get the news, right? On a fundamental basis, it's just key levels and psychological levels. That's all you're targeting. Sometimes price doesn't reach it, but most of the times, because ICC works, most of the times, as long as price continues to respect the trend and you're shorting it, like if you see right here, you're shorting it and it's a trend, it's respecting the high, the lower highs. In theory, it should always keep pushing and respecting the lower highs, right? If it's making new lows, it's going to respect the lower highs. The moment it contradicts, you have to question yourself and ask, is this a point where I need to, you know, take profits, take partials? Well, in the grand scheme of things, in this sense that we're watching right now, that I just illustrated, there's not really a clear reason to sell unless you want to, right? It's whatever you're comfortable with, right? If it hits your risk reward, power to you, right? If let me just take this out and draw this. So it makes a higher high, but then it makes a new low, but then price begins to build momentum and create structure on a micro level, right? So the 1 hour is like building structure, making higher highs. The 1 hour all of a sudden confirms a bullish trend, right? But the 4 hour is just showing like this. The 4 hour is just showing this, and this. There's not really much to work with on the 4 hour, but you can see on the 1 hour that there's a lot of like scribbling going on. There's a lot of consolidation. This point is still remains true because this is still the low of this entire session. It's still the low, right? It's not being cleared yet for a new low, but on the lower time frames, there seems to be a change of character, right? There seems to be a whole new demeanor when it comes to price action. It's when it starts to confirm highs and also breaks past another key level, aka the resistance level, assuming we're just talking about a bearish trend that just reached a consolidation period that is now retesting recent highs because it's making higher highs and also higher lows, right? Keep it real simple. Sai says, keep it real simple. You don't have to use anything else to it. It's just looking at two lines going up and down. As simple as it is, and just recording and talking about this, like, bro, it really, like, I even tell myself, bro, it's really that simple. Why are you overcomplicating it? Because when it actually happens, you're thinking of XYZ, when all of that should have taken place before the trade even happened, right? What you really should be thinking about is just the fact that you're already in profit. You're already in profit, G. And you found the perfect entry, and guess what? Maybe, because look, it's a 1 in 3. Maybe it hasn't reached your target profit, right? Your TP. But you're deep in the mud. I'm sorry, you're deep in profit, right? And price is starting to say, oh. Like, did you make sure that your setup makes sense? Yes, it's an A+ setup. Is the trend continuing up to this point? Sure. It continued, but then it stopped, right? Does it respect the previous high, which would be here? This is a key level, right? Because on the higher time frame correlation, guys, time frame correlation, the previous high, maybe on the 1 hour, it's zigzag. Like, you have this lower low, lower high, excuse me, you have this lower high, lower low, higher high, but then lower low. It's like, whoa, what the fuck? If it was news, that's one thing. That's not really necessary. The ball keeps rolling, right? It's like it's not always linear. It's not always like clear cut, like especially when it comes to back testing. But we know, like for here, for instance, we know this was based off of news, right? Let's say this is based off of news. Who cares? It's an indication at best. Oops, it's an indication at best, right? And then we retest the low, and then we push past it. Candle, wick, doesn't matter. We push past it, right? Candle though, if this was a candle, like that is a strong message that buyers, right? They shot up right after that candle closed right here. Like sellers really wanted this. Let's pretend this is a key level because it is. Sellers really wanted this. Buyers stepped the fuck up and said, no, this is as far as you guys are going to go. And on top of that, we're going to create some ground so that you respect us, right? You respect us. Again, lower low, lower high, higher low, right? Change of character. Higher high, higher low, right? And the third one, the third high, right? Because this is considered a trend. It needs, if you look at Sai's first couple videos when it comes to his course, right? Higher highs, higher lows, higher highs, higher lows, higher highs. If it's the first one's sure, first one is whatever. Second one is the indication that we made a new high. We broke through the previous high. The correction, right? I think I drew that way too perfectly, but this is a retest. This is a clear correction. A clear correction being it's right under the previous high that was broken out from, right? Correction. Just respecting, I was thinking about this, respecting the previous, geez, how am I always getting that curve wrong? Respecting the previous low creates a higher low, right? So here's a pattern. 2 times, it happens twice. First time's the indication, right? The indication is just a pattern off of the trend that's happening. Like the indication is making a high, cool. It's making a higher high. It's creating a potential pattern to continue from. How does this become confirmed? Through a new, at the correction phase, a new higher low, and then past the initial high, right? Past the indication zone, we confirm the continuation, aka the trend, right? Let me take all this off real quick. I think honestly, me like presenting this video, like obviously I do need to present it a lot more clearer, because as much as I can understand it, I also need to be able to say it myself in this. Like when I'm documenting this, like I also need to explain it, be able to explain it clearly. And I understand that, and I'm gonna work on it, right? Anyways, this to me is still within territory of continuing down because it's respecting, like I know we're using the 4 hour and I'm illustrating a 1 hour. Like when I say 4 hour, I'm talking about the whole entire chart. I'm using this as an illustration, right? It's a little bit confusing because it's a part of this. Disregard this. Pretend this is the 1 hour, right? It's super choppy. The 4 hour, it probably just looks like this and this. Really, that looks closer to the daily. The 4 hour probably looks like this and this. It's done nothing but just create a roof, aka resistance. The moment it breaks out, right, on the 1 hour or the 4 hour, the 1 hour already made a bullish trend. That's signaling to me that I should consider dropping out of this trade. I should consider or take partials because I'm already deep in the money. But the 4 hour confirming an indication, it's like, okay, it's just an indication, right? Like technically we swept this high on the 1 hour when we're still on a bearish trend with the indication on the 4 hour. The moment the indication on the 4 hour begins to show support, whether it's a retest, it doesn't matter where, if it shows higher low and then price decides to build up in the indication zone, or it begins to respect the previous higher lows, that's when I'm like, okay, there is clearly, you don't even need to look deeper into this. There is clearly support the entire way through. Let me check out and just carry my bag with me. I don't care for a 1 to 3 at this point. I care about protecting my portfolio, right? That's preference. Protecting the port is always key, but the way I managed to do it in this specific illustration is preference. It's strategy. Some people will commit the whole way and accept the loss. Some people, and look, it was the way I illustrated it. Like, this is the turnaround. This is bound to sweep the entry point, aka or the stop loss. In my eyes, this was a clear indication of price reversing. This was a bullish, bearish divergence, if anything, right? That sometimes, like I've ran through this, bro. Like, and that's through experience. Like you get everything right, and like most of the time, because it's a probability game. That's what trading is. Most of the time, it's supposed to break through. You set it up there because you know that's a key level. Your risk, your RR, it's not meant to be simply just a RR when you're trading ICC. It's just trading the next low or the next key level or the next psychological level. That's it. And going to this event today, I'm just going to ask him how you set the flag pool up to where you're looking to continue on that trade. And it's real simple. It's price respecting the trend, right? I kind of just answered that myself, so I'm gonna have to look back at the notes and find a better question for Sai, because I kind of just answered that myself. It's real simple, but we run into the problems once we're in the middle of a trade, and that's like something I'm personally running into. But let's go back into this whole entire situation. Like this situation that I just explained is me just like this documentation of this video. This was literally my thought process today before I made this. I was like, yo, ICC works. Trends confirm themselves because they create structure. Trends create structure because it respects lows in order to make highs, right? If it doesn't make a high, then that's a sign that price is likely just creating a key resistance point. Sellers may possibly be in control. When does a maybe become a certainly? When price decides to break lows and then completely miss the sell zone. and they do some bullshit like this, and it's like, okay, we're probably witnessing, because even though I'm illustrating this as if it was one time frame, use all your time frames. The whole point of ICC is to use all your time frames to check all the boxes for A+ setups. This is one time frame, so don't get it confused. Use the same strategy for all time frames, right? Because that's what Sai teaches. The moment we notice that look at this chop. It's like a pennant. It's creating lows, but it's creating highs, right? The support's being supported, the resistance is finally resisting. But check this out! We were just in the middle of an uptrend, and now we get a pennant, right? Because the new high is no longer being pushed. Buyers are exhausted and are looking to settle for the next wave. The next wave may entail of a sweep before we get another jump up, which, let me show you how that happened here. Was it? Like right here, look. New high. Wait, where was it? Right here. Literally this happened not too long ago. New high. Price wicks. Doesn't close a candle here. It wicks, meaning it's a weak point for buyers. Buyers are extremely exhausted. And then it tries once more, and it fucking wicks way down here instead of up here. Let alone break out. It wicks down here. And then it also creates lows. And then after all those lows, right? Let me take this out for the sake of clarity. This high, which was where buyers initially made the bombastic jump up here, right? Look at this point. The wick bounces off. It wasn't a sweep. What I wanted to illustrate was a sweep. What actually happened was a nice little bounce off. What I am referring to though is, let me just scrap all this now because none of this really matters at this point, is a sweep back here that takes all the money, and that just, listen bro, this doesn't matter because you're not in a trade right now, you're just observing. Really, this is all observation. There's nothing here that tells me that I should make a trade. But what we know is that ICC protects you from scenarios like this, where price is trying to sweep all the money just to go the opposite way. Look, professional traders, experienced traders, usually have a strategy that actually plays out in scenarios like this, where they actually play this shit. I think TJR plays this shit, right? That's not our strategy. Our strategy protects us from this, right? And what the strategy would really incline is consolidation, right? What you really want from ICC is this. The sweep happens, there's an indication on both sides, right? And then price comes back into the consolidation range, creates support, and then closes above the indication zone again. This is a new high. This is the indication point, right? What do we do with indication points based off of ICC? You either take profits on it, right? You take profit on it, or you play off the trend. Notice how this sweep cleared all the lows and all the highs. There's a new trend being formed. This play is the only play if you are going to make an ICC play here, because you're targeting the indication that confirmed a continuation. Sai is saying, look, sweeps happen. That's the nature of the game. The market wants your money. ICC says, let's wait for price to come back and create a new support for buyers to step in and confirm that they actually want to go that direction. When is it confirmed? When it actually goes this direction, when price closes in the indication zone, right? And how do you make this play so fucking sweeter, so much sweeter? You dig into the lower time frames and you look for this. That's all it is. And then you check boxes. You say 15-minute time frame, uptrend. 1 hour time frame, uptrend. 4 hour time frame, ICC. I'm in, right? Support because 1 hour and 15 minute showed support. 4 hour shows indication, correction, continuation. And then it's a game of probability. You checked all boxes. It's an A+ trade. You can make the play, right? And coming down to the trader, notice how the RR is a 1.32. 1 to 1.32. Don't always use the same fucking amount. Preferably with everyone, and I think it's super healthy. Preferably if it's such a shit RR, your risk reward, the amount of bread you put into this should not be stupid. Meaning it should not be a large amount to where it stresses you out. You don't want to lose as much as you want to win with such a large amount. That's gambling. Just keep it real simple, nice, and respectful to your stash. This would be a 2% to 1 to 3% size at best of the port, right? Versus a 1 to 3. You want to size in whenever the trade looks crispy, the RR looks crispy, and is bacon, eggs, and cheese. Like it's simple. 1, 2, 3. And I'm gonna keep making more videos like this because I love fucking talking about ICC, bro. Like, look, I want to make it out the fucking trenches, bro. I really do. And every day that I talk about this, I have more and more confidence that I can pull this shit off. Shout out to Sai. But yeah, we're gonna wrap it there. That's video number 2. Next video is gonna be post-event. And I'll probably say something that ties along with a key component when it comes to trading ICC, like something that you should know that might come across your head. I'm probably gonna do something like that for the next video. So I'm gonna wrap it up here, boys. Peace.